First Quarterly Monetary Policy Report press conference for 2024. Thank you for joining us this morning, both those who are here in person with us and those who have joined online. As is customary, we have with us this morning Governor Richard Biles, Senior Deputy Governor Dr. Wayne Robinson, and Deputy Governors Dr. Robert Stennett, Dr. G.D. Lewis, and Natalie Haynes. Our agenda is as usual. Governor Biles will speak regarding the bank's latest monetary policy decision in the context of the bank's outlook for inflation and the overall economy against the background of the economy's performance for the last quarter. After the governor's presentation, the floor will be open for the question and answer segment. Governor?
Thank you, Melanie. And may I add my word of welcome to everyone to this, our first quarterly monetary policy report press conference for 2024. The year has started with inflation above the bank's target range. Statin reported last week that headline inflation at January 2024 was 7.4%, which is higher than the outturns for the previous 3 months and above the bank's target of 4 to 6%. However, core inflation, which excludes food and fuel prices from the consumer price index, was 5.9%, which is lower than the 7.1% recorded a year ago in January 2023. The inflation outturn at January this year is higher than the bank had projected in November last year, as we communicated then in the wake of the announcement by the Minister of Finance of the temporary two-phase reduction in JUTC fares. We had estimated that the announced measure would have had a material impact on tempering the inflationary pressures of the PPV fare increases. Inflation was consequently projected to generally remain within the target range, except for December 2023 and a few months in 2024. Upon review, the bank now recognizes that it had overestimated the impact of the reduction in JUTC fares. The two-phase reduction is now estimated to have an offsetting impact of only 0.2% on annual inflation, with the first reduction already evident in the CPI data for January 2024. Notwithstanding the welcomed and offsetting reduction in JUTC fares, the higher than targeted headline inflation at January continued to largely reflect the impact of the increase in the PPV fares, as well as the effect of wage increases throughout the economy. The outturn also reflected high agricultural food inflation, which has been the result of the adverse weather conditions that affected the island in 2023. With this brief background, I will now speak in further detail about the bank's latest monetary policy considerations and decisions. The bank's Monetary Policy Committee met on the 16th and the 19th of February and was advised that inflation is projected to remain above the bank's target range until June 2025, largely because of the impact of the temporary price shocks which I outlined earlier, including the projected impact of the second phase of the PPV fare increase, which is scheduled to take effect in April 2024. Without the impact of this second increase in PPV fares, inflation at December 2024 would fall within the target range. While some key drivers of headline inflation, such as inflation expectations and the exchange rate, have remained generally stable, and grains prices have declined and are projected to continue to fall, the risks to inflation and its outlook remain elevated. On the upside, higher than projected second round effects from the PPV fare increase, higher wage adjustments in the context of a tight labor market, and a further deterioration in supply chain conditions could influence higher inflation. In particular, while shipping prices and oil prices have remained below their peak, they have recently risen amid ongoing geopolitical tensions and supply chain disruptions. Lower than projected inflation could be caused by weaker than projected global growth, which could reduce domestic demand and imported inflation, resulting in lower rates of price change in Jamaica. In the context of the inflation outturn and outlook, the MPC decided to maintain the policy interest rate, which is a rate offered to deposit-taking institutions on overnight placements with Bank of Jamaica, at 7%, and to maintain relative stability in the foreign exchange market. The MPC, however, decided to tighten Jamaican dollar liquidity conditions more aggressively. The committee also decided to maintain heightened surveillance of these risks to the inflation outlook and will base its future monetary policy decisions on the incoming data related to the strength of the potential risks noted above. Let me now look at the foreign exchange market. The foreign exchange market has remained relatively stable, reflecting continued strong tourism and remittance flows, as well as the effect of the actions by the bank. To prevent undue volatility in the foreign exchange market, BOJ has sold approximately US $907 million via its B-Fixit facility over the last 12 months ended January 2024. When these sales are set against BOJ purchases, however, the result is that the bank net purchased approximately US $1.3 billion over that same period. In the context of the stability in the exchange rate, the general downward trend in the dollarization has continued, with individuals and businesses reflecting an increased preference to hold Jamaican dollar assets in the DTIs. Let me now give you a brief update on the Jamaican economy. Real GDP, which is the total value added generated from economic activity, continues to expand. Despite the impact of bouts of adverse weather on the agricultural sector, real GDP for the December 23 quarter is estimated to have grown within the range of 1 to 3%, and there are signs that the economy continued to expand in the March 2024 quarter. This continued economic buoyancy is mirrored in the decline in the unemployment rate to a new record low of 4.2% at October 2023, supported by anecdotal information about wage adjustments in selected private sector industries. This data on unemployment indicates that the domestic labor market remains very tight. We have seen strong job growth in a wide cross-section of the economy, but it has been more pronounced in sectors such as tourism, real estate, and other business services, which tracks the progress of the BPO sectors, among others, the distributive trade, transport sector, and construction. When compared with the growth in the value added of the economy, that is real GDP, the strong growth in employment suggests that the productivity of labor continues to decline. Combined with the real wage adjustments that have occurred recently, this fall in productivity continues to be of some concern. Looking ahead, The bank projects that real GDP will grow by 2 to 3% for the financial year 2024-25 and between 1 and 2% over the medium term. Ladies and gentlemen, Bank of Jamaica remains absolutely resolute in its commitment to achieving its primary mandate of returning inflation to its target of 4 to 6%. The MPC will utilize a full set of tools at its disposal to support the policy decisions and is prepared to take the necessary actions, including further tightening of monetary policy if the emerging upside risk to inflation highlighted above materialize. Thank you, and I'll take your questions.
Morning, Governor. Duran paid over today. I note where you mentioned without the second round of increase in the PPV, your inflation target would fall within the target range for December 2024. But I'm asking now, factoring the second increase, what will be the likely outcome?
June 2025.
June 2025.
That's when it will get back into the 4 to 6 corridor.
Secondly, Governor, you mentioned about the tightening of liquidity. Could you indicate the form it would take? Well, I would suggest that you'll be mapping up excess liquidity out there. So how much liquidity do you project this measure will?
Can't say how much. From day to day we see what liquidity exists and we issue OMOs. So no predetermined number. It just depends on what is the liquidity at any particular date. Maybe SDG Robinson want to comment on that.
I think that's the key issue, Governor. We offer every week open market instruments or certificates of deposits to the market, and we assess for the 4 weeks ahead what the liquidity flows are like. And of course, you'd appreciate that that's a very dynamic scenario in terms of how liquidity moves in and out of the system on a daily and weekly basis. And from then we calibrate the level of absorption that we want.
What about repo? Not looking in that direction either?
Well, that is in essence what I'm talking about, our certificates of deposits. That's what we issue.
Good morning, everyone. Andrew Laidley, CVM Television. I was just wondering if you could break down for me the thinking behind the tightening of the Jamaican dollar liquidity decision. Just break down what the intended effect or impact you're expecting from that.
Well, one route that we could go is to raise the policy rate even further. We consider that to be a blunter instrument than absorbing liquidity. Once we take liquidity out of the market, which we will, essentially with higher interest rates, make it more attractive to the banks and institutions to leave deposits with us. What that does is dry up the system of funds to do whatever, for people to borrow, to consume, or people to borrow, to expand business. So by taking the liquidity out of the system, it generally tightens up economic activity in the economy.
Thank you, Governor. Also, I'm wondering if you could, expand a little bit more on what could be accounting for the fall in productivity in the labor market.
I give you my opinion, but I think between Wayne and Robert, they're probably in better positioned. A lot of the jobs that are being created at the margin are essentially low-value jobs. Jobs in construction, jobs in the tourism sector that essentially involve being a waiter, waitress, or housekeeping. The BPO at the entry level. So essentially these are more jobs coming into the economy, which is a good thing. I don't want you to misunderstand. It's a wonderful thing that we have unemployment at 4.2%. But the jobs coming in at the margin are low-value jobs. And what that does is that it pulls down generally what is the productivity per employed person. Because the GDP is not growing that fast, and you have more people employed. So the GDP per person is being lowered. What is the solution? No short-term solution, I don't think. What it requires is for the country to get serious about creating conditions that will allow for more high-value jobs to be created. And what does that involve? That involves producing persons who are more trained and more skilled to man high-quality jobs. So it means that our education system needs to be looked at in terms of the kind of person that they are producing, what their skills are, as well as the country needs to try to attract to its shores operations that can use those people. Now, you don't want to train them and then they migrate. So it's two things that have to be done simultaneously. And generally, it's not a quick fix. It takes a while to be able to turn out, let's call a number, 5,000 more technically qualified people to man higher quality jobs. And it takes a while to attract businesses that can employ those persons. But if we set our minds to it, as we did with our whole macro fiscal structure, remember, just 10 and a little bit years ago, we were tottering on the edge of bankruptcy in this country. And since then, we have pulled ourselves up to S&P, WP minus status. Never before. Who would have thought that Jamaica could do that? So why can't Jamaica fix its productivity problem too? Takes the same solution, cooperation between political parties, between civil society, private sector, as well as a plan that we follow in a meticulous and committed manner. That's my speech, and I love to hear it.
Governor, counterintuitively, when you mop up excess liquidity to eliminate, cauterize the drivers of inflation, that within itself caused banks to want to raise interest rate. What assurance can you give the consuming public out there that we will not see interest rate, bank rates running away?
Well, I don't think we'll see bank rates run away, because we don't intend to dry out the system to the extent where bank rates will run away. But generally, what we do want to effect is a reduction in liquidity that is available for bank credit. We rather the banks put the money with us than lend it to the public, whether it's business or individuals. And Wayne has a comment to make on that.
And also to buy FX, foreign exchange, you want to take away some of the Jamaican dollar liquidity that's available for that as well.
Good morning, Governor. Quite a number of companies are stocking up on inventories because they're concerned about the geopolitical tensions that's happening and also the supply chain disruptions. I'm trying to get a sense of if you have quantified, if things worsen, how this might impact inflation.
I don't know that we've quantified it, but we've had experience, post the COVID experience of supply chains really tightening up, and we know what that has been like. Freight costs went through the roof. There are shortages and prices rose crazily. We don't want to see that happen, but we see that as the extreme of what could happen. This whole geopolitical situation is so unpredictable, and even stuff that happens way across the other side of the world can impact us. So we don't know exactly, but we have an experience which we hope we don't return. Just to say though, I mean, in recent times, I believe the Panama Canal bottleneck has eased somewhat. Thank goodness for the rains that they have had there. But the situation in the Middle East doesn't look any more stable than it did a month ago. So that is always a risk for us.
Good morning, everyone. Javon Keys, TVJ, and Radio Jamaica. My question is regarding elections. So it's election season. On Monday, the Jamaicans go to the poll. Have you been able to see any kind of impact on election spending and inflation?
No, I would say that at our level we haven't seen it. So I think that's all I can say.
Yes, and I mean, it's early days, but what we have to pay close attention to is, well, what is the government's own expenditure profile looking like in this election cycle? And certainly, if you go by what was tabled in Parliament and what is set out in the fiscal policy paper, the government is maintaining a very tight fiscal ship. So it's still early days yet. So at this point, we have to wait until the data comes in.
Thank you. We have a question from Siobhan online. Siobhan, go ahead.
Good morning. Good morning. Can you hear me?
Yes, we can.
Morning, Governor. Just two quick questions. I understand that the BOJ has to walk a tightrope between the interest rates and the concerns over the country's economic growth. And I realize for quite a few quarters now, the bank has been kind of gun shy in terms of raising the policy rate. Is there a concern then that any further increases in the policy rate could have a deleterious effect on the country's economic growth? And is there a inflation number by which the Bank of Jamaica feels if we breach it, they will have to raise the policy rate further?
To your last question, no, there's not a rate that we have predetermined that if inflation gets there, we are going to move the policy rate. Meeting by meeting, month by month, we look at the incoming data and we make a judgment as to what is causing that increase. And there are many issues, and particularly for a small open economy like ours, there are exogenous matters that can impact inflation, over which our policy rate has no impact. So, if there's a shortage and oil prices go through the roof, raising the policy rate is not necessarily the best approach. So let me say we have no predetermined rate at which we trigger increase in the policy position. But we do have other tools within the monetary kit that we can deploy, one of which we did at NPC last decide, which is the liquidity situation, to be much tighter on that, which in a way will have a similar effect without raising the policy rate. Because if you become more, if you issue CDs that have attractive rates through auction pricing, then you will find rates generally will rise at the margin. So that generally I think is the situation for us. No predetermined rate. We're not, it's not that we are unconcerned about economic growth. Of course we are, and we do want economic growth, as does every Jamaican. But we do have a mandate of price stability. And to the extent that effecting that mandate runs counter to economic growth, then you will find that we will be prepared to do whatever it takes to bring inflation down, even at the cost of some economic growth. Happily for Jamaica so far, despite what we have done, economic growth hasn't turned negative and has been, in fact, fairly buoyant for the post-COVID period.
Hi again, Governor. We've seen the tabling of the revenue estimates, for example, for the upcoming fiscal year. And you've mentioned the reduction in PPV fares, for example. I was wondering if I could get from you an understanding whether you think, what more could be done on the fiscal side to kind of bring inflation into the target range that you're looking at, or toward?
Excellent question. Because inflation needs to be fought by both the monetary side as well as the fiscal side. And generally speaking, the government is doing a pretty good job on the fiscal side by running a surplus. So once they run a surplus, it means that they're taking in more through taxes than they are actually spending. And what that is doing is that is taking purchasing power and liquidity out of the system. So we're happy with that general position of government. Can they do something about the particular issues that impact inflation for every single Jamaican? Maybe. We'd have to leave that to the minister and the cabinet to decide. But the PPV rates really did jerk inflation in October, and it will jerk it again in April. So I don't know if you can petition cabinet on that issue.
Just a follow-up. We'd have heard of, right, we'd have heard of 1.520.
Right, that was my follow-up.
You don't know of 1.520, Governor?
Right, and if I could add an extension, because we've seen the clearest indication yet that the government is intending on moving that tax threshold up. So I'd love to hear your perspective on that and the possible impact of that if and when it goes up.
Well, I think it depends on how much it moves.
And if you're willing to say how far would be too far.
No, we haven't modeled that. We haven't modeled it. But it depends a lot on how much, and it depends also on when it occurs. So we would have to put that in our model and say, well, if it was X amount, what is the potential impact? Because what that does generally is reverse taxation. And what you would normally have paid, you now have more purchasing power, more fuel for inflation in general. Right?
Yeah, I mean, generally it's agreed that moving away from direct taxes to indirect taxes is a more efficient form of tax regime, and it's also more growth promoting. But it will be premature for us at this time to opine on any potential impact or prescribe any particular adjustment. A lot will depend on how that adjustment is financed and accommodated within the overall fiscal envelope.
Right, so the first 1.5, that goes to 1.51. I'm catching up. That was balanced by adjusting indirect taxes. So if it's done in that way, then it doesn't have an inflationary effect.
So my question is for Ms. Haynes, and this is looking at the currency issue, particularly the issue of the new notes. So I mean, I know that the projection was to have us using the old notes for at least 2 more years, but I wanted to find out whether or not you're seeing possibly even a fast track as it relates to when we would see those old notes no longer being a legal tender. And I also have a CBDC question for you as well, but let's take on that one first.
All right, thank you for that question. All right, so currently when we look at the notes in circulation, the number of pieces, because that's what we measure, it's about 40% that are the old notes, all right? So the 60-40 ratio. We are no longer issuing old notes since last year, November. We are going to give it a little more time because recall there are still some issues with some of the ATMs. The banks are currently at about 99% in terms of ATM acceptance of the new notes as well as issuance of the new notes. However, for some banks, one in particular, the 2000, they're still retrofitting for that. And so we want to wait until that is achieved and you have full coverage for the new notes in all ATMs across the island. Also, the time taken before you actually say it is demonetized, that's the term we use. You'd have to give the public advance notice to say the demonetization is X date, and that of course also has to be gazetted. So we're going through that process. And of course, Bank of Jamaica's accommodation in terms of destroying those old notes. We have to be ready for when that 40% comes back in, we have to be destroying it. So we think the 2 years is still adequate in terms of all that preparation.
Sure. My next question is about the central bank digital currency JAMDEX. I know Governor spoke about the fact that, you know, it wasn't moving at the pace that the BOJ initially hoped for. So what's the progress now? Are you seeing more people eager to come in, and what's happening in the sandbox?
All right. So in terms of, I can answer the sandbox first. No new applicants since this year in the sandbox. Who we have, the persons are actually doing successful testing. However, we have to await the amendments to the Payments, Clearing and Settlement Act for those persons to graduate from the sandbox. We are well advanced with that. Cabinet has approved the amendments, and so Office of the Parliamentary Council is actually drafting the amendments. So we're on track with that. For CBDC, still not, the take-up is lower than what we would desire at this time. Two main reasons. Let me deal first with the more difficult one. Merchant adoption. Most of the larger merchants would prefer for payments of JAMDEX to go through their point-of-sale machine. So currently what we are doing is testing a solution in our sandbox for that, to use a dynamic QR code for payments through the point-of-sale. They don't want a next device, they want the same machine that takes the debit and credit cards to accept JAMDEX. In addition, the wallet providers still want fully on board in terms of having clients. We expect 2 more banks to come on by the middle of this year. So that is going a bit slow for us.
Thank you.
If I could just add, Natalie, you know, being one of the first in the world has its challenges that are unique. And what we're finding is that as we roll it out and we see an issue and we address it and move ahead, there's another one that pops up. And I guess that's what you get for being amongst the first. You don't have a roadmap set out by others who have walked that path before. But we are determined. I mean, when you look at all of the cash problems that the public complain about, fundamentally, digitizing transactions is the ultimate solution to these cash problems. ATM breakdown, ATM not in my area, bank no wants to come into the building to do cash transactions. All those issues go away with digital transactions, whether it's credit card, debit card, wallet, CBDC, whatever. That's what we really want in this country. The use of cash is really quite high and creates problems that are, you know, intractable. People are under threat because of the whole security issue. So, you know, I don't think I would want to be a beryllium worker or driving a vehicle with beryllium written on it. So, you know, these are issues that digital currency will eventually address.
My question is directed to Deputy Governor Haynes, and it's a follow-up to Javon's question. Are the merchants providing any reasoning for why they would want you to use just the POS?
customer experience must not be any longer than it is now. So if you have a line of customers and the cashier has to be navigating between this point of sale for the credit and debit, that one for Jamdex, like in Japan, I mean, that's the norm. You have about several machines to take the different payment products. They don't want that. They want one cashier to be able to use one machine for all payments. It's a customer experience. And of course, integrated into their back-end systems and so on.
Governor, hello, and Happy New Year to you and the team. Governor, we started off well with tourism. The flows seem very, very good, numbers, everything on track. Here comes this advisory, and it's really put a spoke in the wheel. And it keeps coming up every few weeks to the detriment of the country. What are your thoughts there? Because you've probably seen them for, well, great, I'm getting these great inflows coming in. But where you have this advisory advising, and most of our tourists come from North America, and they're basically saying, well, look, don't come to Jamaica. And there has been a little bit of a slowdown, I understand.
Well, we're sorry to hear about the slowdown, and if it is attributable to that notification, it's to be regretted. Jamaica is as safe as it was last year and the year before. So, I mean, we're not tourism specialists, so I really don't have a comment other than as a Jamaican, you know, where I feel our environment is, you know, conducive to any visitor to come here. So we certainly hope it doesn't result in the tourism flows turning south.
Governor, earlier I had forwarded some questions, or 5 I think, that I would love to discuss. One of them is actually a suggestion. It has to do with banking services and the reportage of it. I had suggested that we institute a name and shame, but probably you want to use something a bit more palatable than that. Essentially, it is similar to what the OUR does with the utility companies, where they track the number of complaints. There's a matrix that indicate the best performing, worst performing. And I think something like that would perform some sort of incentives for the banks to really improve upon the service delivery. Last time I was here, I had mentioned my credit card that I noticed that there's an insurance cost attached to it. When I made inquiries from my bank, I was told that they sent out a circular to each card holder to say, as of April, they will be instituting a insurance cost. If I don't agree, I can respond. Now, in this modern day governor, with somebody like me who gets voluminous emails, I did not see that one. And now the bank is telling me that the fact that I didn't respond, they automatically think that I agreed to it. And I'm saying in this modern day, it is not good enough. And because I don't have a big bank account, I actually notice this cost. Imagine someone who has a big bank balance. It would be nothing to them. But I'm saying these are the little services, Governor, that we need to address.
Yeah, so I would ask you today to speak specifically on the fees.
Right, but could I also say, in the Twin Peak concept, I'm saying this should be appendage to it. We need to know who is performing. We need to know the level of their performance. And also you can have a matrix that track. This month you might be worse performing. Next month you might be improving. So now you are the most improved quarter over quarter. Something like that, that we give the customers like myself some empowerment that we can get the bank.
Yes, and listen, I hear the passion with which you raise this thing for the second time, right? So I know it hurts, and I know that there are others out there who feel exactly like you.
And in fairness to my bank, I got back something like $12,000 that they charged me over a 10 11 months.
Excellent. But Jide, you want to make a comment on that, and then we want to say something about Twin Peaks and where that is going in general.
All right, so I would say, reframe from a sort of a name and shame perspective. But certainly disclosure is something that is embedded in the Code of Conduct that was instituted in 2016. So banks are obligated to make disclosures. One of the things that they're required to make disclosures on include fees and charges. Those fees and charges have been posted on the BOJ's website, and I think for at least 10 years now. So those are available. The bank can certainly consider publishing in our newspapers revenue for the publishing houses. We can certainly do that as part of a sort of a wider public service. So I think in principle there's nothing problematic with what you're suggesting. Our objective would be to see that there's greater competition across the sector as consumers contemplate, where they're getting better service delivery, where they're getting better rates, and so on and so forth. Specifically to your particular complaint, one of the things we want to point out is that if you do take a loan product, the insurance only kicks in if you default. So essentially what it is a mitigant for the bank in the event of a default on the facility. And so what they're doing is that they are actually that's the purpose of the premium that you face. So banks have to manage, they receive deposits and they deploy those deposits either via loans or via investments. Where they make loans, they have to ensure through their risk management function that they have reached either to the collateral, but of course, credit cards are uncollateralized or unsecured form of lending, and so as a mitigant, that would be the rationale. However, what we want is for customers to be choosing who is giving me the best premiums, who is willing to absorb that particular risk, and that matches my profile better. So in that regard, I think your suggestion is something that we can certainly take on board.
But my issue though, banks like any other business are in the business of risk. Now, when you take away all that risk, you get the insurance from the credit card. Credit card has a prohibitive interest cost if you default. So you get the interest cost. On top of that, you're asking me to insure, and at the same time you have the JISTV insurance. So what is the risk that a bank takes?
So let's put it in the buckets, and I think one of the things that we're hearing is that there really is, this whole idea of financial education is critical. Once you pay your facility in full and on time, you are going to have a good credit score, and that allows you to be able to access more financial services. That's how the ecosystem is driven. If you don't pay on time and on full, you really expose the financial institution to financial risk. They have to then figure out how to mitigate that risk. So for example, if you borrow a house loan, they will take the home or the house as the collateral. If you default, then they repossess the house. They sell the house to get back some of the money, the funds that they would have issued to you at the beginning of the loan. Similarly, for credit cards, it's unsecured. So once you default, the natural state of play is that they're out of pocket the funds that they would have granted you on the limit, and so they have to look at a mitigant, which is insurance. The JDIC is really only a last resort. JDIC steps in if the bank fails, and of course you can fail because one bad loan, a big loan goes bad, but you can also have death by 1,000 cuts. So if 1 million of your customers all default or all late, you're going to have a liquidity crunch on the one hand or a credit portfolio that's in default, and then you're going to be bankrupt, and then the JDIC has to step in. So the JDIC is really in a sort of a catastrophic event, which, as I said, could occur either because there's one facility that's large that goes bad, or many customers that are all defaulting simultaneously. So I hope that helps.
That helps, and I appreciate it, and I understand it. But what I'm saying, there's a concept called a risk premium. I pay an added risk premium because of my risk. And my point is, in addition to paying this astronomical risk premium, I don't have to pay a second insurance. And this is what's happening with the credit card. Remember, the default rate is something like 50-something% in my case. So I pay that 50-something as a default in the event I default. On top of that, you're charging me an insurance cost again.
So
and then you're a bank in the business who's supposed to be taking risk.
So let me clarify. Recall, the interest cost that you're paying is only applicable if you do not pay your credit card in full and on time. So if you pay on full and on time, you have no interest cost. That's the first thing. So as a consumer, you have power. You have power to manage your finances in such a way that you don't pay the punitive rate. The punitive rate is triggered when you're late. So that's the first mitigant. Then the next one is if you continue not to pay and the card goes into default, then they would have been collecting insurance premium. That's the second mitigant. And the third mitigant is, of course, going to be if everybody is defaulted, and we spoke about the JDIC, and that's really way, way, way at the end. That's not even in the same ballpark, so to speak. That's a whole different scenario. So I think it's a perspective. The 50% that you're talking about is only applicable if you're consistently late. Or you pay a part. So you have to pay in full. That's why I keep on emphasizing with a credit card. You have to pay in full. So you see that minimum payment amount, you have to ignore that. You have to pay the full amount, and then you pay no interest cost. And what we want is, then let's take away from your particular situation, what we want is for consumers to understand how the instrument works, use it in a way that fits their profile, and know that they have options. And if we can get to that sort of sweet spot, then I think banks can be in business, which they're in business to make profits. That is very clear. But consumers can get good service, and I think that's the sweet spot that we'd love to get. And clearly the central bank has to work on education.
If I could say, I mean, I hear the agony in your voice. I think that you reflect the agony of a lot of consumers in the financial services. So let's talk a little bit about Twin Peaks. What we have currently is a Bank of Jamaica that is excellent at prudential oversight of the banks only. And you have the FSC that is looking at the rest of the financial sector. What we want to develop ultimately is a market conduct and customer protection agency, the new FSC, which is going to be expert in setting out regulations and managing it and monitoring it on behalf of the customers, the public. And we're working on that even now. You know, right here now in Bank of Jamaica, this week is a program going on in the area that we normally have our press briefing with over 100 FSC and BOJ persons being trained by the Toronto Centre in some of the aspects of customer protection and market conduct. That is what we want to deliver under Twin Peaks. It's going to take a little while to actually get the legislation done. All of the organizations set up and fully manned. But in the meanwhile, as we go along and we see issues, we are going to prosecute those issues a little more vigorously within the framework of the law. For example, for the last 3 weeks, we have been having discussions with the commercial banks about this whole ATM matter, the availability of cash, and whether ATMs are working or not working. We've had intense discussions with them and bringing some moral pressure to bear on them to step up their game, even in the absence of us having any legislative power to say to them, you have to do this, you have to meet that standard. And we've been having some success with it. not as much as we would like, but we don't have the power. They, however, know, and so do all of the members of the financial sector, that when Twin Peaks comes, the whole game is going to change. This area of market conduct and customer protection is going to improve dramatically. It's not going to be just step by step, it's going to be dramatically. And we want them to prepare for it. And that is why even from now we're consulting with them and letting them know what to expect and when to expect it. Wayne, I don't know if you want to add something to that.
Yeah, so, well, what I'm doing is just give a general update as to where we are in the process of Twin Peaks. But also just to add that one of the things we also want is a financial landscape where there is increased competition. So consumers, customers of banks have choice. They can see what is being offered by different banks within the system, and not just that, they are able to move with much less hassle than what obtains now. So we're actually also working on that. The governor had mentioned some time ago that we are looking at how we can have a centralized EKYC facility that will prevent or do away with a scenario where if you want to move from one bank to another, you have to then provide the new bank with the same set of information. So we're working on that as a part of another set of initiatives just to drive competition within the banking sector. But in terms of where we are on Twin Peaks, which, as the governor says, will be a game changer, it's a major reform. The joint BOJ-FSC team continues to make steady progress. We're looking at a number of pillars. The governor mentioned that the development of a market conduct and consumer protection framework. Also, we are looking at the overall legislative framework. We are looking as well at the prudential framework as well, how we are going to actually unify the prudential oversight of both banks and non-banks within the Bank of Jamaica, not just looking at the regulations, but how operationally we will conduct supervision. And we're looking at the institutional aspects as well. So we're looking at what is the appropriate organizational structure for both Bank of Jamaica and the FSC, the staffing, and also importantly, how we're going to actually underwrite the cost of supervision, which in both institutions, which is quite costly. What I'll just add is that where we are on the legislative aspect of the work is that draft cabinet submission is currently being reviewed by the various agencies within government, including the Attorney General. So we are just trying to finalize that cabinet submission. In terms of the organizational structure, we have a well-recognized international expert who is actually with us as we speak, that is actually looking at the structure both in FSC and Bank of Jamaica to see the reforms that are needed there. So we are progressing on that. And importantly, as the governor intimated, we're not just waiting on the legislation, but we are exploring avenues within which, even before the legislation is passed, we can actually strengthen the oversight for both prudential and market conduct regulations. So we're looking, for example, to see where we can further collaborate with FSC in terms of synchronizing supervisory activities for both banks and non-banks. And as the governor indicated, we are looking at trying to address some of the consumer protection issues that you have mentioned. So as a part of the consultations that we have started with the banks is to set out what we think are the key principles that should govern the whole market conduct and consumer protection arrangements in the new Twin Peak. So work is progressing steadily. It is quite an involved piece of work, as you would imagine, but we're getting assistance from a number of international experts, and we're also speaking to other countries that have actually implemented this, United Kingdom, South Africa, so as to get more concretely how it actually rolled out, what was their experience in terms of on the ground. So we are progressing, and you will hear more in more concrete terms as to what the new framework will be, hopefully in short order.
Governor, Warner Media, we've been there before. Some of us can recall Cash Plus, Olens, Worldwide. You sit on top of those twin peaks. From your vantage position, do you think we should be doing a better job of financial education, literacy? Because we keep repeating ourselves with this.
Yes, I was shocked to know that our memory is so short. Hopefully it's, the virus hasn't spread very far and has been contained. But Al, you're absolutely right. We do have a financial education program, but it's not as it should be. And again, I don't want to go back to Twin Peaks, but that is going to be a major part of the market conduct and customer protection mantra for the new FSC to make the public more aware of issues like these as well as other financial matters. So yes, coming we're looking at the prudential and we're looking at some market conduct. We're not doing both of them the justice that they need. But particularly on the market conduct side, we're not as expert as we should be. And that is what we need to come up the curve on very quickly.
One last one from me, Governor. On the issue of competition, one of my 5 questions was actually an update, because I've heard for some time at least one financial institution has applied for a commercial banking license. And both Dr. Lewis and Dr. Robinson mentioned about competition in the market. So my 2 questions. 1, could you give an update regarding commercial banking license? 1. And 2, based on what we have discussed, the need for greater competition, do you see room for more competition? Are you comfortable with the level of banking competition that exists?
Anybody or group of persons who want to set up a commercial bank are free to make that application. And I say that openly. Bank of Jamaica is open to more commercial banks operating in Jamaica. But they, of course, the principals have to meet certain criteria, not the least of which is fit and proper, have the capital, and have the expertise to run that operation, and hopefully some experience too in running a bank. So the gates are wide open. Whoever wants to apply, come in and show us your business case, show us your principles, and you will get a license. We're all in favor of more competition.
An update on that one which has been in the
I don't think we have any. We don't have any application for commercial bank.
but I hear in progress.
No. So we don't provide, on a case-by-case basis, we don't provide to the public information on applicants as a policy, because of course these are transactions, business transactions that are occurring. So there's a concept called material non-public information. An application that comes into the central bank falls into the category of being material and non-public. So we can provide information generally speaking, but we can't provide information on a application that could potentially prejudice an applicant and have legal ramifications. Similar stance is taken on the stock market as well for transactions that are occurring.
Governor, this is a wide sort of, this is a sort of question which has a long tail. But I just really want to ascertain your thoughts on it. As you know, Capital One and Discovery are going to merge or looking to merge. What do you think of that? And do you see that in any way having, what sort of impact would that have here in Jamaica?
Not to my understanding, Capital One and Discovery are two substantial companies that I guess there are lots of efficiencies to be gained from that merger. But I don't know that they do much business here at all. Maybe some credit card from tourists originate from these companies, but I don't see any implication at all.
Do you see? How do you see correspondent banking now? That's something that we've talked about before. But have you seen any advances in that area, or what's your take there?
Natalie or Jide may be in a better position, but I don't think it's got any worse. And the fact that we are making progress with FATF and that our rating has improved considerably must be fundamental to a better environment. But Jide, you have more details.
Sure. So we would have done a review of our situation in terms of correspondent banking relations maybe about a year ago. We're in the process of refreshing that review. At that time, we did still detect instances of de-risking, though a lot more subdued than would have occurred 5-7 years before. What we're noticing now from that particular survey, which we would have issued to the DTI sector, is that rather than not offering particular services, correspondent banks are curtailing offering to particular segments or lines of business. One, there may be additional fees that the banks here face as they try to provide services to members of the public locally. So the banks themselves have additional fees associated with transacting with correspondent banks. So it's something that we look at very carefully. We also observe that there are fewer correspondent banks offering services to local financial institutions than they were 10 years ago. So you have more concentration of correspondent banks. That's something that we want to look at very carefully, because what that means is that when one correspondent bank it makes a business decision to not offer services, it's going to be affecting a wider cross-section of domestic financial institutions compared to what would have happened 5-10 years ago. We're going to do a refresh of that just to see what is happening. But when we did our deep dive into it, what we determined was that a leverage point in addressing the issue of correspondent banking relations and de-risking was trying to deal with the issue of being, in the gray listing process, the ICRG process of FATF. So quite a bit of resources, time, and effort has been spent trying to meet all 13 action items under that. I can say that all 13 action items have been addressed, but it really is now for FATF to make that determination that they're either largely met or met. And if they come to the determination that that is the case, which they're doing this week, by the way, we will hear, by next week, maybe 2 weeks from now. And then the process would be that they would send an assessor to evaluate what we have put to them in writing, and then they will make a determination as to whether or not we can exit the realistic process. So that's what we're really focusing on, to make sure that the jurisdiction as a whole is seen as being compliant with all the AML and CFT standards that are issued by this global standard setting body. And we think that will be a fillip to being able to say Jamaica is bankable and open for business in relation to being able to engage with correspondent banks abroad. So that's really our line of attack at this point.
All if I can say, it's been a long, torturous process that DOJ has led. It's been from before the pandemic. We started on this road, and it involved marshalling all kinds of government institutions, civil society, to get it all done, including going to the Privy Council to get some decisions. So, and if we hear we are graduating, we're going to have a little party.
Hope I get the invite. Governor, just a quick follow-up question. Governor, many of us have gone to a few of these quarterly briefings, and we had the institutions still bemoaning high interest rates. I thought you, for want of a better word, threw him a bone last night with your monetary policy. But they're saying the same thing. Well, the interest rates are too high. It's the operating environment isn't that good. What are your thoughts? Is there another way around they should be looking at to sort of offset around interest rates, the interest rate regime? What's your take on that?
I mean, interest rates are only high in the last 3 years. It used to be much lower. And once we have broken the back of inflation and it's solidly in the corridor, interest rates will recede. But inflation is a deadly disease, and it hurts everybody, but it hurts the poor more than anyone else. And we do have to fight it. If we don't do it, who is going to do it? So we need to take the medicine, stay the course, get inflation back into that corridor in a safe manner, and then we can start to bring interest rates down. But despite fairly high interest rates, business has continued, and there is real growth in the economy. So it shouldn't be understood that our policies have stifled the country and the economy. They have not, and we have been as judicious as possible in how we implement, so as to not create undue harm to the economy.
Governor, the strategy you've employed, are you heartened when you see, for instance, Japan, Germany, and the UK going into recession? When you look at that, what do you say to yourself?
Well, we can't take any claim for that, for Jamaica. We're happy that we are on the path of positive growth, because it could be different. Partly, I mean, we have a very strong tourism sector, and that has been a very big part of our recovery and sustainability. So we're happy for the fact that we can equal 2.5%, 3% growth in this environment. But we have to deal with the inflation issue, must.
But when you look at those strong economies and how they've sort of been a little bit upended, what are your thoughts? What do you think? Do you think they should have pursued a different way? Or what's your take? What do you think when you see it?
I have so much focus on Jamaica that I can't solve Japan's problem, which has been a standing problem for the last 30 years. You know, from I was a little boy, Japan has had, stagnant growth and so on. So they have a chronic, fundamental problem. But other countries go into recession sometimes and come out. The UK, Germany, even the United States. But thankfully, it's not as severe as it could have been. Recall what we've been through, and that pandemic and the subsequent supply chain problems was big worldwide. I mean, many times there are events that occur, but they're not worldwide. This one was. We have survived it, and here is where the world is. Not perfect, but in a much better place than it could have been had it worked out differently. Okay.
All right, thank you everyone for joining us, for your questions and the lively participation. Have a good day.
Thank you.